Welcome to TradeTheNBI.com. This is John. This report is for the 29th of March. Yesterday, well, we pretty much did exactly like we thought. Nowhere. We're a little bit up, a little bit down, and finished exactly at that same 4,009-ish range. Where was the close? It was actually 4,001. So slightly below it this time, whereas before we were slightly right at it. Still a bit more negative when you look at it from a DOC, but at the end of the day, the S&P really hasn't been the lead on this. It's always been the Nasdaq. And from an MBI reading, that Magenta staying above yellow the entire time from the original breakout has been consistent, but you can see how erratic it's been, where we had the white lead, and the fact that it's above the 25 adds to the strength on there. Um, the NQ has been the predominant one. It's been in a little bit of soft spot. We're seeing a brief upturn. There's still been zero activation from a short standpoint with that MBI white, and even pretty soft from the DOC change right here, where we had some extreme movements going through there, but shorts pretty much overwhelmed within this setup, and things holding on pretty well overall from a bullish standpoint. Um, any spike up though of the orange might create a little bit of a draw, and the question will be here is, do we get the crossover of green over red? Rejection there would be significant, and that would be the first tell. But you can see from where we were matching the markets, you had Nasdaq here at the 12.4 range, you had the S&P at the 4,008, and you can see the distance move significantly greater for the Nasdaq, and that is just simply because the move to tech has been pretty much the only thing keeping things from falling apart, at least more dramatically. When we look at treasuries from this standpoint, still way over valued here on TLT, simply because the yield should be higher given what rates are, but the amount of money flocking into it has really reduced yield temporarily. It always evens out in the end. And from an oil standpoint, that climb back, we're now back into the mid 70s here. We had that break below uh, significantly, which would have been fantastic if it had held on. Um, Again, it's way too early. The fact that we had the reduction to the, below 80 range for a while, it helps. The question would be how much. We won't know for another couple of months, but I would say that if you're able to keep it predominantly below that 70s and 80s range, then oops, that would be ideal situation. Recorder pop up there. From a gold standpoint, it's going to keep hovering for a little bit, but I think it's still more buy than not, simply because all the factors still point to increased money printing in that, and it's going to be a hedge. Now, the question some people will always say, well, how much, should you be into that? Well, I mean, you always want some degree of diversification there, and whether it's split between gold and cryptos, each of those has advantage even within currencies at this particular stage. Like you see the euro making its move. Since the break below par has been nothing but straight up, and nothing has improved in the eurozone. So the explanation for that hard to justify because the eurozone still is not producing anywhere near what the U.S. has been doing. So that alteration is a bit odd. Bitcoin moving back up, a little bit stronger move than gold, and I think Bitcoin has proven itself to be the premier mover, even over ETH, simply because of its again the scarcity and its length of trade. Once the scandal had passed and everything had been absorbed. It's something that we talked about then, that limited supply having shaken out all the weak hands, and you get just this that build. ETH, it's also making its move, but I think proportionally, I think Bitcoin is going to make more dramatic moves from a 50K standpoint. At the long it went out of, and then we were back and forth, and it's gone back to the long again. Short had some movement, but it was too quick on the turnaround phase, so didn't really do a whole lot. intraday setup. It was pretty interesting ranges. I mean, we broke down to the 92 algo that we've had from way back, popped slightly above it, hit it again, and then once we built up on it and broke above, that's where you're looking at right here in post market. Has been straight up to the peak and literally coming all the way back up past the highs from the previous day there. So that is an indication the algos just counter trading. Once they've got the momentum going and you guys short covering, you got it made and you just go with it. That's why I always say just be flexible with it. This is going to be a bunch of significant range moves, and you just want to take advantage of them as they swing. So that's the long and the short of it for now. Mostly long in this particular case. As always, trade well. Have a good one.